That's at least a strategy. But I think that Bitcoin is a very good, timely, and compelling strategy, and one that with a modest amount of it can dramatically improve the credit risk and position the assets to accrete value in inflationary periods rather than to dissipate into nothing.
Hohns points out that while many of us are still trying to grasp Bitcoin's role in our portfolios, we're missing a critical point. Bitcoin is the only monetary asset with a fixed supply. Unlike dollars, euros, or even gold, there will only ever be 21 million Bitcoin. As demand rises from new sectors, energy, cybersecurity, art, payments, culture, that finite supply gets stretched thinner. And here's the kicker. Most people still don't own any Bitcoin. Adoption is still in its infancy at the individual, family, and business level. So the value proposition, it's still early. Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space, and drop your comments and observations in the comment section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks, and enjoy the video.
The right proportion of exposure to different inflation combating strategies. Timber historically has kept up against inflation. Okay, well, maybe timber, but maybe the way that people are living will change, or maybe, I don't know, but that's at least a strategy. But I think that Bitcoin is a very good, timely, and compelling strategy, and one that with a modest amount of it can dramatically improve the credit risk and position the assets to accrete value in inflationary periods rather than to dissipate into nothing. Intrinsic value forever, but the intrinsic value of the progress at that moment, because after all, we have a long way to go in terms of individual adoption, family adoption, business adoption. But we don't have a long way to go in terms of supply. And we have a long way to go in terms of the use cases of Bitcoin: energy, grid management, heat recapture, those are all mining, payments, cybersecurity, Bitcoin culture, Bitcoin art. We have a very long way to go on many different use cases, which we haven't so much talked about on this interview, but maybe in the future. But all of those are demanding more and more of this finite asset. And as they come online, they're presenting another buyer for this very scarce asset, which is not motivated by its inflation use case, but it underpins the value proposition as an inflation protecting asset. And so when you mix all of those factors together, I don't see any reason to think that we're going to have, muted upside on a permanent basis. I think that it's going to be cyclical. I think the cycles are very hard to exactly say what the size of them are going to be, because you're measuring it in something that you don't have any idea how big it will be, which is dollars.
So hold on tight and the dopamine hit will come.
Yeah.
Followed by pure depression.
Well, but, if you take a long enough outlook,
exactly.
Yeah.
Yeah.
Yeah. You should mentally compartmentalize as an individual.
Yeah.
Right? You should have, there are some things that, look, some people buy a stock or an index fund and they literally don't do anything with it for 20 years. They don't look at it, they don't sell it, maybe even 30 years. Like, humans have the ability to say, okay, I'm going to set this portion aside for this period of time. But the problem with the Bitcoin is that it's so fascinating, and you have it on your lock screen and you're constantly looking at, the price, and it's very gripping, and, it's such a rich environment around it, and it's so engrossing. But I think that, this is definitely, the best advice that I ever received in respect of it was just to, when in doubt, zoom out, take a longer term perspective on what's happening, and try to mentally compartmentalize the object of, how you allocate your own asset portfolio, so that so that you have the ability to make that medium to longer term voyage.
This concept of low time preference is central to the Bitcoin ethos. Hohns highlights how this principle, made popular by Bitcoin thinkers like those at 1031, urges us to defer gratification, think in decades, and align investments with meaningful life goals. It's like planting trees you'll never sit under, and it's a mindset we desperately need as society faces massive disruptions in labor, governance, and economy.
Phrase that I didn't really know about before I, got so interested in Bitcoin, but I've come to appreciate a lot, and this is coming from the 1031 team, because they call their funds the low time preference funds. And at first I didn't know, well, what does that even mean? A low time preference, high time. And then of course you do a little bit of research, you learn about it. But, the idea is, okay, lower your time preference, right? Don't eat the chocolate right now. You don't need that immediate satisfaction, or just have a smaller amount. Take a longer view on where things are headed. Put in the time for physical fitness. Put in the time for a good diet. Put in the time for study. And what is so interesting, I would say, about Bitcoin is that beyond a financial asset, I have seen firsthand the very significant behavioral economics impact that Bitcoin has on many different facets of people's lives. And it,
changed my life almost entirely.
there you go.
Yeah.
And it makes you wonder, you might be traveling to a beautiful place and you walk by a souvenir stand and you see this, this irrelevant tchotchke, which is for sale. And before you might have thought, I'll buy this thing for $2.99. But now you're using Marty Bent's opportunity cost app in your mind, or maybe even have it on your phone, and you're saying, I definitely don't need to spend 2,500 sats, on that thing, or 25,000 sats, or, whatever, 2,500, I guess it would be. And soon it will be 250. And then, 25, and then 2.5, because you have this opportunity cost in mind, and it just orients people toward a much greater degree of savings and self-investment and self-improvement. And it enables you to focus more time on the things that matter, spending time with your family, with your friends, focusing on the important things in life. And for some people that might be faith, for other people it might be fitness, for other people it might be friends, or any combination of all of those things, and we've seen that for individuals. So now what's exciting to me is, what can we rationally project of those things onto corporate adoption? And by corporate adoption right now, I mean a little bit less treasury company and more like small businesses. And how about farms? What if we added Bitcoin to the collateral package of family farms across the United States or across Canada? Imagine what that would do to recapitalize the agriculture sector in those countries, because now you have an uncorrelated asset on the balance sheet of the farm. You have a liquid asset against which the farmer can draw resources to invest in new equipment, new property, new working capital for seeds or fertilizer or labor. And on top of all of that, you have a tool that is extremely attractive to the next generation, where they say, you know what, if I join the farm, this is actually my best path for wealth in the digital economy. This is my best path to get 1 Bitcoin or to get 2 Bitcoin, is to take over the family farm. Whereas before I thought I was going to, make TikTok videos.
Or go and sit in a box 9 to 5.
Right. Or do something, totally pointless. And so you imagine that for agriculture, and you can do that by integrating it into loan packages. Small businesses, you can integrate it into loan packages. Obviously, medium-sized businesses, larger businesses, but then again, where we just were, which is governments. And a lot of people have lost, they've lost, they don't trust the institutions like they used to, right? That's what everyone is saying. We all hear it, we feel it, we see it. And maybe But things change quickly. And and especially in democracies where these institutions are comprised of us, right? We are these institutions. If we could integrate some of these Bitcoin incentives into our public institutions, could we not expect that these institutions might flourish and change? And would we not then want to invest deeply in the well-being and success of these institutions? I think that, I'll leave you with this, which is you did a great episode recently with Brandon Quittem on the fourth turning, and it's a really fascinating, story. I mean, it's a little bit pop history, but very informative and very interesting. And a lot of people are focused on the fourth turning right now. And I think that's understandable. But what's really interesting is to go back and read that book and focus on the first turning. Because, the fourth turning is almost over.
Yeah,
And
3 or 4 years left.
right? Or, it's not a science. So maybe, maybe 3, maybe 4, maybe 1, maybe 2, but it's almost over. And knock on wood, we make it. And everyone who's listening makes it. So now actually the name of the game is, what's the first turning like? Because that's the next 20 to 25 years. And if you go back and you look at what that's like, that's the environment that long-term investors should be positioning for right now. And time is this common denominator that, that's all we have in the end is time. And how you use your time is the most important question. And if you invest and save in Bitcoin, what you get back is time. And how you use it, in the end, it's basically everyone's choice. Some people will use it to paint or write poetry, and other people will use it to surf or, whatever. I mean, soccer, and others will use it to work because work is their passion, but they're working on something that they're passionate about or they're researching. Others will cook, spend time with friends or family. And that is just, it's imperative too, because a lot of the jobs, and we didn't have a chance to get into this too much, but we should. A lot of the jobs are definitely going to profoundly shift with robotics. I mean, there's no question.
I think it's already starting.
It's already starting. And I mean, you look at the Teamsters, one of the largest unions, maybe the largest, I don't know, but one of the largest unions in the United States, truck drivers. How many truck drivers are going to be humanly driven? How many trucks will be humanly driven in 15 years?
You'd have to guess none, I think.
Right, probably none, and the only question, the correct answer is none. The only question is, what length of time do you put in that? Is it 3 years? Well, that seems a little implausible. Is it 30 years? That also seems implausible. So let's just say 15, but it could easily be 7, it could be 9, it could be 12. And if you have those jobs just dissipate, then that's a major political crisis.
Yep.
And so now is the opportunity for the Teamsters and the Teamsters pension and every other labor union pension to think about, okay, time out. How do we integrate an investment view that has some protections and some defense against inflation, and is pivoted toward the future? And I think that we can discuss multiple implementations, but to me it seems like Bitcoin is a phenomenal building block.
Imagine family farms across the US or Canada collateralizing loans with Bitcoin. It's an uncorrelated, liquid asset on the farm's balance sheet, enabling investment, innovation, and generational wealth transfer. Younger generations, often disinterested in farming, might actually return, not out of obligation, but because digital wealth and physical work could finally intersect. From small businesses to mid-sized companies and eventually governments, Bitcoin could become a stabilizing force, not just a speculative one.